Let's say for a starting point, if a trader knows exactly from where price is gonna take off, then this thing will give an advantage, huge advantage to that trader, because he will then have a high accuracy, and that those losses, some losses will be small. And now the thing comes, if you add something to that, that is going to that is going only to distract you, or you can say anything you add extra will be forcing you to exit first, or it is going to stop you from taking the trades. One of the reason of low profitability of traders is also adding something extra to their system. I know it is sounding something obvious or very easy, but believe me, this is something that most people find difficulty in. I strongly believe that reading price action, understanding price action is an invaluable skill to the traders. But the problem comes when beginners believe that every time they believe that something extra is needed to make themselves profitable. Something extra, some mathematical formula, some magic, some holy grail is there that is going to make them quick, rich overnight. And they think that that is their edge. But do you know, if even you don't see the chart, you just place a buy order or sell order, you have 50% chances that you are right. Now, speaking of beginners, some beginners also introduce indicators to their system, and they think that these indicators will make them rich or make them profitable. But just try to understand that indicators work well for some traders, but if you understanding price action and relate it with your personality, right, you are hearing it right, just understanding price action and your personality, you can become profitable, and you don't need any indicators for that. Beginners, they just don't realize that all the indicators are made up of three components: price, volume, and time. And indicators are only beneficial when you need something in your system that gonna take much time, but due to indicator you can get it quickly. There are some indicators which suggest you, which gives you an idea what is happening in several things, several component of your trading system, and that is going to help you. Not that indicator is going to make you rich or make it profitable. Have you wondered some oscillators which are famous for trend reversals trading? Well, when you use oscillators, the problem comes when you focus on oscillators, indicators most, and just ignore price action, that what candles are saying you. For example, in oscillators that is used for trend reversals, then it can be beneficial most of the days, like when price literally have some reversals, 2 or 3 reversals at least in a day for an hour or two, then it is beneficial. But if you keep on using that, you will definitely miss out when market starts trending, and you will definitely lose money when market is trending, because you will not understand that yes, the situation is gone on your opposite side. It is not in reversal anymore, it is trending. People look for divergence, but if you clearly see, if you back test, you will back test with a bias, not biased, just honestly, then you will find that some people trade it for divergence, and all day it makes divergence, and literally it's 50% chance that you will make profit. So all this will force you to trade counter trend, because the trend is changed, but you are still entering in counter trends and thinking that it is a reversal, but it is trending. So you will lose money every time you enter in that positions. And by the time when you realize, you generally realize that yes, market is now trending, so it will be late and day is over. Now you don't have any time for recovering your losses or trade more, right? If you still wanted to trade, right, you can't because time is up. And finally you will realize that if you didn't watch that oscillators and you just read that price action carefully, honestly, then definitely you might be in profitable state. Let me give you a fundamental fact that most of the reversals happens after a strong breakout of trend line with momentum, then a pullback happens, then price moves, then you can say it is a reversal. So if you watch indicators or oscillators much, then definitely you are going to miss this fundamental fact. Let's say you have a divergence, but if you clearly see the price chart and there is no counter trend momentum surge while breaking that trend line, so in absence of that, this is a losing strategy. So just wait for the trend line break and then see whether the price comes to test that extreme or not, or the trend continues or not. Then if you see that price and in the chart clearly, you will clearly understand that yes, this is a reversal or not. You just don't need these indicators to tell you that this is a high probability reversal trade. So the point is, just why to complicate your strategy? Why to complicate your trading? And why are you thinking to add this calculus to your trading system? Just understand price in the chart. It's okay. You will definitely develop a strategy and that will make you profitable trader.